Hi guys, so let's take a look at internal finance. So when it comes to internal finance, of course, this is finance generated from within the business and its own business commercial resources. So primary example of internal finance, the most commonly used internal source of finance is of course retained profit. So retained profit is profit from previous periods, but it is of course after tax profit, and it has not been distributed to shareholders, okay, because shareholders are likely to expect a share of those profits given to them in the form of dividends. Okay, big advantages over all these different types of internal finance is you don't have to pay interest on any of them. So this is certainly true here. There is no loss of ownership, no divorce of control which takes place as you sell shares, for instance. It's also immediate, of course, because you should have that money within your business. The downsides, however, yes, it may be limited, and it may mean that you pay lower dividends to shareholders, and that may upset some of them perhaps, okay? Right, net current assets. So net current assets really is your cash position on a day-to-day basis, okay, but it is a slightly broader term than that as well. So it considers the money within the actual business, okay, but it will also include debtors, people that owe you money and you're expecting payment for within, say, perhaps 28 days. Okay, now in which case you may need to actually chase down those people to encourage them to pay up a little bit earlier. Okay, you need to have good cash flow management if you intend to actually use net current assets to finance any sort of expansion plans or capital expenditure. Now chasing up debtors may irritate those consumers as well, so you've got to be nice in the way in which you undertake this. Perhaps if you offer them a discount for prompt payment, yeah, that little sweetener may well work, okay, so that will keep them on the right side of you and ensure that your cash flow is in a really good position, and make sure that you do have sufficient internal finance. Okay, then we've got sale of assets. So this is of course selling assets owned by the business. There's no interest once again, and it may mean disposing of unused assets, okay, which may actually free up some space for the business, and so that might be good news. Now the downside of this is that you may have reduced future capacity. So for instance, if you sell a vehicle, well, that might be good news for you because you no longer have to worry about parking and so on, but the downside is that you've got reduced future capacities for perhaps delivery services. Okay, so there we go guys, lots of interesting stuff there. Hope you enjoyed that. See you next time.